Hi everyone, my name is Arjun Ghosh, and the last time we met I explained to you the incomplete records. Now today I'm going to be explaining to you a new chapter, which is the accounts of clubs and societies. Okay, so this is a completely new topic, and it's based on, as this topic suggests, accounts of clubs and societies. Okay, so let me give you a few pointers before we start the chapter. First of all, the main aim of the clubs and societies is to provide services. They don't sell goods to the consumers, not usually. The main motive is to provide services. So, and the main source of income is not sales. It's similar to sales, but in the terms of accounts of clubs and societies, we are gonna say that they're subscriptions basically, which is equal to the term related to the trading account, which is sales. So we're gonna write subscriptions is the main source of income. Okay, so that was a couple of things. Oh yeah, and one more thing which I missed out. That as you know, clubs have members, right? So when clubs have members, they pay an annual amount to the club or that society to use the facilities throughout the year. So that is one point, that amounts which members pay allows them to use the facilities throughout the year. Okay, so those were a few pointers, and now the thing is that in accounts of clubs and societies, the terminology used are pretty different from the terminologies used for trading businesses. So I'm just going to give you like a list of terms which we are going to use for the clubs and societies. So first of all, the financial statements, I have explained it to you in a long time back actually. So the financial statements of clubs and societies consists of these four things. So in the financial statements, these four things are included in the clubs and societies accounts. So first of all, there is a receipts and payments account. I'll explain these to you in detail, and I'll show you the formats for these also, but for now let me just list these down. Then there's the trading section of the income statement. I'll just write trading section over here. Followed by the income and expense account. And finally the balance sheet, which doesn't need an explanation, I guess, for now. So these were a few things you should know of the accounts of clubs and societies. Now the next thing which I'm going to tell you is about the first pointer over here of the financial statements, which is receipts and payments account. I'm going to give you the format for it and the entries, generalized entries which are usually there. Okay. So first of all, what is the receipts and payments account? It is, let's say, receipts Okay, so receipts and payments account is basically the summary of the cash book of the clubs and societies. Okay, so if you have seen my previous videos, a cash book is pretty simple. You just have to, on the debit side of the cash book, you have to write all the incomes, on the credit side, write all the expenses. And finally, at the month end, you have to balance them, and then you can reconcile them with your bank reconciliation statement. Okay, so that was the thing. So the receipts and payment has a very similar objective, and its format is also pretty simple. So I'll give you the format later, but for now, let me just write down the pointers for this. So receipts and payment account is basically a summary of the cash book. The second point is very simple. On the debit side, write all the income, and on the credit side of the receipts and payment account, write all the expenses. And as you know, the receipts and payment account has to be balanced just exactly like the cash book. Must be balanced at month end. Month or year end, it depends on how the businesses decide to keep it in the question. And so the balance, in this receipts and payment account, you don't have cash and bank calling separately. It's like just a simple cash book. So that balance may represent the cash balance or the bank balance, or maybe both also. So balance can be cash or bank. Okay. The next point is, and if the balance is a debit balance, it means it's an asset, and if it's a credit balance, it's a liability. The next point is that I think I've taught you the concept of accruals and prepayments. If you haven't, you can please see my video on accruals and prepayments. It's a pretty short chapter. Okay, so what I'm going to tell you about now is that if there are any accrued expenses or prepaid expenses or prepaid income and expenses, so those adjustments are not recorded in the receipts and payments account, because this is only the income which you have received. You can't write the income which you haven't received or payment which hasn't been made. So there is accruals and prepayments are not included. The next point is that, so earlier I think they used to, in the cash book, we used to make a distinction between capital and revenue receipts and capital and revenue expenses. But in the receipts and payments account, both the capital and revenue receipts and expenses are written out as the same. So there is no distinction. Between capital and revenue, I'm sorry, expenses and incomes. which basically income is basically receipt. So I think you can understand that. And finally, the last point for the receipts and payment account is that non-monetary items such as depreciation is not included. So if you don't know what is depreciation, you can look at my earlier video about depreciation. I explained everything in detail over there, so you can have a look at it. So non-monetary items not included. So these were the points which are in the receipts and payment account. Now the next thing which I'm going to show you is the format for the receipts and payment account.